Howdy, folks. This is Dr. Jeff Camarda. Warmest season's greetings. This is the piece, a word from Jeff, which is titled, Where is the Market Headed from Here? These are my post-Thanksgiving thoughts. Recorded this the first Monday after Thanksgiving. It's often said that October is one of the scariest months for stocks, and this one certainly scared the bejesus out of investors the world around. November, the beginning of the typical seasonality bull run, whole selling may go away. Well, you'd be buying back in November. November initially offered some respite as shares bounced, but ultimately the gloom descended anew and shares plunged again in November. As mentioned before, we attribute this autumnal plunge to three primary factors in decreasing order of importance. Number one, trade jitters morphing into outright fright. While the Trump administration seems generally on track in resetting the world trade order, China has proven intractable. Loggerheads with the world's second largest economy, yes, China's that big now, and arguably the world's most important low-cost manufacturing center, has given the market fits because of the potential to disrupt U.S. companies' supply chains, corrode U.S. companies' profits, and chill global trade for many, if not most, countries. There is a non-trivial risk that this issue may nudge much of the world and even the mighty U.S. into recession. This is the big cloud hanging over the market, and it seems to be getting worse. If and when it clears, as Camarda expects it to eventually, the market should respond with a very, very nice spurt. Valuations of U.S. stocks have been frothy for a long time now, and we've been overdue for some air letting out of the bubble. Trade jitters, more than interest rate hikes really, though they're also important, trade jitters supplied the trigger for what we believe is a very healthy correction in a still healthy long-term bull market. While a bear market is inevitable at some point in the next few years, we don't think it's here yet. Just a real healthy deep correction. The inevitability of interest rate increases, number two, has finally become apparent to the greater investing community. This is somewhat perplexing since the need to normalize rates has been obvious to many of us, including Camarda, for many years. But in any case, higher future borrowing costs are only now being baked into stock pricing. Higher rates will chill consumer spending on financed items like homes and autos, which are already suffering, and make it more expensive for companies to borrow and expand. Still, rates are and will be for a long time to come low by historical standards, and we think the market will eventually come to realize this and not be overly impacted by interest rates. While we remain concerned about these factors, we take seasonal cheer from the fact that we've entered the most historically profitable time of year for stock investors who have generally done quite well, as mentioned, from November to April, much of the time. After the drubbing that markets have suffered since the September highs, there's every reason to expect, though the prospects are diminishing, a typical Santa Claus rally, and Camarda expects a fairly robust pop and nice numbers for your account sometime in the next few months. Hopefully not into Q2, but it certainly is possible. Longer term, we're still very optimistic about the outlook for non-U.S. stocks, as well as carefully selected and shopped, as in shopped hard and bought on sale, U.S. stocks, the way we're doing with our new Caesar strategy. Now, we note that value stocks, the kind Camarda favors, solid companies at cheap prices without much air to be let out of their balloons and market corrections, seem to have enjoyed a renaissance of late, holding up relatively well as the market falls. We also note that the hardened trade positions of the Chinese and Trump administrations pose a very real risk of kindling a U.S. recession in time to upend Trump's re-election chances. A risk we can't believe has escaped the notice of Mr. Trump's advisors. If for this reason and this reason alone, we expect to deal with China relatively soon, which will take a lot of pressure off the markets. Mr. Clinton's "it's the economy, stupid" triumph over George H.W. Bush will not be ignored without peril. And I'm sure that the Trump administration, regardless of your political stripes, the reality is that I think this will drive a China deal, which would be very good for the economies the world around and the markets the world around. And that's it for now. This is Dr. Jeff Camarda, sans Santa Claus hat, but with the seasonal tie. Hopefully it wasn't deleted by the green screen. This is wishing you a very, very warm and happy holiday season. Enjoy each other and us, and we do hope to see you at our seasonal gathering next week. Bye-bye.